I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome back to the show, Danielle, and happy Canada Day and 4th of July for our friends south of the border. Danielle, emerging market weakness, is it spreading or has it been contained?
Oh, that's actually a favorite word, isn't it, of central bankers. They love to use the word that, the mortgage market mess in the U.S. was contained, that there was just a small group of people that were going to be affected and all that sort of thing. And now we're looking at a lot of stress building in developing economies around the world because during the period of easy policy, easy money policy, QEs of all the major central banks, and the U.S. leading the way, they had a weakening effect on the U.S. dollar from 2011 into about 2017. And then during that period, of course, people are very infamous for thinking trends will continue indefinitely. What happened was a lot of emerging economies borrowed in U.S. dollars because it was cheaper, they could get lower rates than they could at home, and because the currency was weakening during that period, so it made paying back those loans less expensive for them as the U.S. dollar weakened against their home currency. Of course, flip to present time, and over the last year we've now had the exact opposite, where the U.S. dollar hasn't again been strengthening, and the opposite effect is now happening where these mammoth debt levels have leapt in terms of their borrowing cost, in terms of their ability to service that debt. A lot of countries are finding increasing difficulty, and now we throw into that, Jim, the Trump spike in trade rhetoric and falling global trade as it is, and then more talk of more tariffs and all that sort of thing. And of course, the impact of that is to have less cash flows globally. So as there's less cash flow going around the world, and you've already, and paying your debt payments has increased dramatically. I mean, we're talking about, in some emerging economies, the U.S. dollar is up 10, 20% relative to their home currency. In others, it's even higher. In places like China, where Chinese businesses have been borrowing their hearts out over the past number of years in U.S. dollar bonds, even the Yuan, which is generally pegged to the U.S. dollar, is down about 6% since February. It's down just about 3% just this week alone. So we're really having a very rapid adjustment in terms of much higher borrowing costs along with less cash flow going around the world to make these payments. And you've got a perfect storm brewing there for a lot of liquidity crunch. And that's what tends to contaminate and spread in highly levered markets. So my long answer to the question, of course, is that these things are never contained. In a globalized economy, in a globalized financial system where everyone has borrowed against everything else multiple times over, when leverage is at an all-time record high, it takes just a couple of dominoes to start falling in one part of the world for that to have a knock-on effect in other parts of the world. And we're seeing that right now pick up steam. So I think it's the theme that is going to be with us for a while. I don't think the trade rhetoric is going away anytime soon. The tit-for-tat tariffs that's happening. And, Jim, the reality is that the U.S. is much better positioned than most countries to withstand this tariff cycle because they actually are net importers from pretty much every major trading partner in the world. In other words, if they decide to turn inwardly, they have a much better capacity to produce the goods that they need for their consumption at home. They also have a disproportionate number of wealthier people, and the average household income there is much higher than the average in many of these developing countries. So even though Americans are also very indebted at the moment, their ability to eat their own cooking, so to speak, is much greater than most other countries in the world. So that's, again, another factor that tends to strengthen the U.S. dollar in this point in a cycle. And as that continues to strengthen, you have, as I say, greater and greater liquidity shocks in many of these other countries. And as we've seen in Canada, weaker and weaker loonie.
We'll have more with Danielle Park right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're speaking with Danielle Park. Danielle, do you think we're going to end up with a 60-cent dollar again?
Well, it is interesting. Our target for the U.S. CAD was 133 at the end of last month. We broke through that this week on Wednesday, and now, we may indeed consolidate in here for a while because it's been a pretty abrupt move year to date for the Canadian dollar. The U.S. is up against the CAD 9% since last September, and 5% year to date. So, and that, don't forget, is even as oil has bounced 22% year to date. Normally we would move with the price of oil, but in this particular environment where we have very negative implications for trade, as well as a very indebted and weakened domestic economy in Canada, our data has been disappointing over the past couple of quarters. Again, our central bank has become much less certain to hike, even though, a couple of months ago everyone was saying 80% chance we're going to increase interest rates in Canada, that the central bank would in its July meeting. Now it's down to less than 50% odds of that. And our thesis all along has been that the slowing economy at the end of this massive expansion cycle that has been engineered by central banks for the past few years, this is the normal sort of ending point, and many of the things that follow the real economy have been trending down for some time. Industrial commodities, the things that tend to be less financialized and less traded, the rubber and cowhides and even copper and silver, those things have all been falling again since 2017. And our thesis has been that the central bank of Canada was going to have to blink because, they wanted to normalize the rate curve a bit, get rates up so that, if we head into the next recession, they have some room to cut. But unfortunately, I think they waited way too long this cycle. They let everyone get far too indebted. And now, they're being caught flat-footed because they really have very little room to cut as the economy is already slowing at this point. So again, we have a lot more to lose in this trade dispute, not just with the U.S., but in, if there's a protectionist culture in many economies around the world, Canada is more vulnerable. We really haven't played the expansion very well. We've really wasted a lot of our funds on non-productive personal consumption, and that's just not how you build a balance sheet for a rainy day. That's not how you keep capital liquid. So you're seeing a lot of flight out of the Canadian dollar, out of Canadian equities. Many of the stockbroker houses are now recommending clients shift from the Canadian market, which is underperformed for the whole period, the whole cycle. We've underperformed some of the like for example the U.S. market, which has been one of the best performing in the world. So we've already had a non-stellar performance in Canada, and really our banks have been the big sort of gold star. They've really had a great rally in the past couple of years, but, again, highly vulnerable banks in general to this diminishing global trade means less transactions, less fees for them. And also we're into a very flat yield curve in this environment, which is the fact that, they have been hiking short-term rates and long-term rates have been coming down on a bet that the economy is slowing. So when you get into a flat yield curve, and, the U.S. yield curve is today the flattest since August of 2007, Jim. Canadian yield curve is also very, very flat. It's very difficult for banks to, bring in deposits and lend them out with a decent profit. It really erodes their profitability, and so you're seeing that U.S. bank stocks are off 11%, Canadian are almost down 6% just since January. So, it's interesting. We've been watching the yield curve as it plays in as an indicator of economic strength and where we are in a cycle, and commenting for some time that it's been flattening. But as I said, we're very close to zero here. And the last time, as an example, when the U.S. Yield curve was this flat in August 2007, the recession began by December of that year. So everything that we're watching that's, yes, we've been through this very sort of epic time of extend and pretend, add debt on debt, add debt on debt, and leverage on leverage, but that was always going to end one way. Ultimately, you were trying to outrun something that was impossible to outrun, which was the pay down repayment phase, which is inevitable because when you're overly indebted, you can only get out of it by, write-offs and bankruptcy and or pulling in consumption and paying it down. And we're really at that phase all over the world, not just in Canada, but everywhere. And so that's why global growth is already on the decline part of the cycle.
We'll have more with Danielle Park right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Danielle Park. Danielle, are we headed for a plastic disaster out in the middle of our oceans?
Well, I think we've already got that, Jim, don't you think? I mean, what is the stat? Something like 50% of the plastic that's on the planet today has been produced in the last 5 years. So we are at an absolutely insane level of production. And I think that, unfortunately, recycling has been a major placebo, so to speak, in our awareness of this topic because most people believed that when they were sorting things into blue bins that they were being responsible and that this product was being reused and remade into other products. But that has not been the case. It's very much misleading. Some 80% of plastics that ends up in blue bins ends up in landfills or ends up getting shipped to poorer countries, which very often ends up in our water systems. For many years, China was accepting the plastic waste from the West. They've now put a stop to that as of January, which is a good thing because we really have to have it pile up around us, I guess, to get our attention. But what I've really been noticing in the past few months is it's very difficult today to function in our economy without buying everything in plastic. And when you really make an effort, as I've been doing for the past few months, to not bring it home with you, right? Once you appreciate that it's a farce, it's not being recycled. So once you get it, you're literally putting it into landfills or water systems or, perpetrating the problem. And you say, I'm just going to stop. I'm going to say, I will not accept it. So when you do that, sure, you can, I've done lots of things like get reusable, cloth bags to literally pick up produce and buckets that you can bring around, going to farmers markets, all that good stuff. Many personal use products, however, today are almost entirely in plastic. Many of industrial use products, anything you want to buy, for, staining your deck to anything you're using around the house, mostly always comes in plastic. I went to a pharmacy last week to pick up a prescription, and I said to the pharmacist, have you got any other container you can give us this, salve in than a plastic container? And her response, of course, was, no, we just get these recyclable containers. And I said, but you have to understand, they're not being recycled. So we have to find a new container to put this stuff in. Either it has to be, a glass bottle. We could go back to glass bottles. We could go back to aluminum. And same at your local, grocery store, even your local, sort of health food store. When I go in there, same thing. I'm saying to the owner, can you get anything in this product line that's not in a plastic bottle? And, he's sort of like, oh, geez, I'd have to look for that. So I think it's important for everyone to insist on this conversation now, to wake up from our slumber and to say this is one of the greatest environmental threats right now. It is something we can certainly do something about. It is not necessary to produce everything in plastic. And if you remember, Jim, when we were kids, it wasn't all in plastic, right? We did have all sorts of things, mostly, aluminum glass. We used bars of soap, not pumps with plastic that you toss. So we can find our way back, but it really is the time, I'm afraid. We can't just keep putting this off because, as I say, now that less and less countries are accepting our waste, which is an embarrassment in the first place that we've been, using and abusing and sending it off into the world, now that they're not accepting it, I think it really will bring this issue front and center. And we have to go back to, of course, accountability between the product producer. So there needs to be, if you're going to have an ethical message about your product, it's got to extend beyond the contents to the packaging that you're using. And, we need regulation that says, like for example, how the beer store collects back in beer bottles. You take a deposit, they make that bottle for their product, they bring it back, they reuse it. We need that to be reattached, the producer to the responsibility for taking back the packaging. And once we set that up, I think it could go quite quickly. But it starts with consumers' awareness, revelation, giving a care, caring enough to change behavior, and constantly asking now for alternatives.
Danielle, thank you so much for chatting with us, and have a great Canada Day.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite, her website jugglingdynamite.com. I'm Jim Goddard. Thanks for listening, and happy Canada Day.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.